Thulelwa ngezilokotho ezinhle Ithala kanye neGo Digital SA Foundation. Thamelani izifundo ze-mathematics, i-accounting, isiZulu ulimi lwasekhaya, isiNgisi i-FAL, i-physical science, i-geography, ezobuchwepheshe, i-computer applications technology kanye namaklasi e-learner wellness okungukuzilolonga ngokomqondo kanye nomzimba. Lezi zifundo zethulwa nsuku zonke kusukela ngoMsombuluko kuya ngoLwesihlanu kuqala ngehora lesi-4 kuya kwelesihlanu u-4 kuya ku-5 ntambama nangoMgqibelo kusukela ligamanxe ihora lesi-8 8:30 kuze kugamanxe ihora lokuqala emini 1:30. Zithameleni futhi lezi zifundo emsakazweni Ukhozi FM njalo ngoLwesine kusukela ngo-9 kuya ku-10 ebusuku. Ningangena ekhasini lethu lika-Facebook elithi Go Digital SA_movement noma kwi-YouTube uthi Go Digital SA Foundation. Siyethemba nizolijabulela lolu hlelo oluhlose ukunifundisa futhi lulekelele kulokho enikufunda ezikoleni zenu. Luthokozeleni-ke lolu hlelo nimeme nabo bonke abanye abafundi bebanga le-12 grade 12 ukuze nabo bazuze kulo futhi nonke nicijeleke ukuphumelela kwizivivinyo zenu zokuphela konyaka.
Namhlanje-ke sahlangana futhi sizokwenza isifundo se-accounting. Siyathemba ukuthi la kwisifundazwe sethu KwaZulu-Natal nizobhala ngoLesine upaper 1. So uzonenzisa-ke i-income statement, wrong net profit after tax, ama-notes ambalwa, then bese kuba i-balance sheet. Le question lesizoyenza i-question yango-September 2019 KZN. Weleze kune-district lapha eLimpopo i-Capricorn beyibhalile-ke bona ngo-2020 iyafana exactly the same nje ukubona ngiyiphethe esandleni nansi laphana screen sakho uyayibona la question yona sizoyenza-ke ngaphandle kokumosha isikhathi lesihlabele igama. Financial statements ama-marks maningi kakhulu lapha 75 marks. Isikhathi-ke sibalulekile. Choose the correct term to complete of each of the following. Write only the term next to the question number. It's only a term. Ubhala i-term kuphela lapha ubhala i-statement igama elilodwa nje. Sesiyaphendula-ke ngokukhulu ukushesha i-auditing-ke le. Question yokuqala, the audit report is addressed to. The answer there yokuqala is shareholders. Bhala mfundi shareholders. Shareholders. Audit report is being it's addressed to the shareholders. Remember, my shareholders are the owners of the company. Answer uqala leyo. Yesibili, management duties are given to by the owners. The management duties are given to the directors. Right, this is directors. Okay, and then question ESC. Question is thathu. But noma yokugcina out of 3 marks. The audit report is issued by. We have 2 auditors there, internal auditor and external auditor. External auditor or independent auditors. Ama auditors as mele independent or external. External auditors. Utholileke lapha u1% okungu 3 marks. Remember sibhalela u 300 marks. 3 divided by 300 is 1%. Siyaqhubeka nequestion. Calculate the correct net profit after tax for the year ended on 28th of February 2020 or 2019 if usebenzisa last year September question paper KZN. If you have sensalena 2020, it's only the dates into eshintshile lapha. So sesiyacalculate-ke i-income statement yethu. Let's do the income statement. The income statement is not a normal income statement. It's a wrong income statement kufuneka siyi-correct because we are already given a net profit after tax. Nikeziwe vele after tax laphana ku-C. Income statement. Yonke information iqala lapha ku-C iyezansi. Income statement for the year ended 28th of February 2020 or 2019 if usebenzisa uSeptember ase-KZN 2019. So into esiyinikeziwe lapha kusinikezwe a wrong income statement, I mean net profit. But the net profit before tax was incorrectly calculated, so that is wrong. It was incorrectly. So net profit or wrong net profit after tax or net profit after tax. Tax. Nansi figure yakhona sinikeziwe 1,449,200. Okay, that's a figure there. So bakhona ama-adjustment ke lapha ku-D. The following information was not taken into account. So you can see ukuthi ngempela the net profit after tax was wrongly calculated because there are things that were not taken into account. Ekade zingazange zicountwe zona, right? Directors fees, right? So directors fees is an expense. Directors fees ayafana nama salary, I mean ayafana nama salaries. Uthi nje lena ke got a special name ukuthi ama directors. If usuyi director usahola salary choice directors fees. Right? Directors fees sisayicalculate ifigure yakhona. Check ukuthi sinani laphana. Basineze ifigure engu, okay, let me just do figure engu 625,000. 625,000. Nansi into abasitshele yona ke laphana. Basitshele ukuthi on this one we have two directors that are entitled in the same directors fees. The directors fees 625,000 was paid to two directors. So we have a director A and director B. These are directors, right? Director A, director B. And one of the two directors requested his fee for March 2019 be paid in February. So remember, we are always doing a balance sheet for the year ended, income statement for the year ended, ratios for the year ended. So which means lo sefuna ukhokhelwa 12 months plus 1. So which means it will be 13. It's 13 now, 13 months. And therefore, lo omunye still will be entitled to 12. If you add that, you get 25. So now, director's fees is over for 25 months instead of 24 months, 12 and 12, because one of the directors has requested to get his March director's fees in February. So that's why it's 13 and 12. So from this figure there of 25, so now we are saying now 625 divide by 25. 625,000, right? Divide by 25. You get 25,000. So what do you call this? This is a prepaid expense. So 25,000, it's a prepaid expense. Always when there's a prepaid expense, you must less. So this figure is already here. So we have to less this 25,000, the prepaid expense. So this figure, remember, is going to note number 5, trade and other receivables on the notes. Now we are saying 265,000 less 25,000, therefore you get 600,000. That's the correct figure there. Okay. Then we move on to another adjustment. 80% of packing material were used during the financial year. 80% of the packing material. Packing material is an expense, so the figure must be in brackets. Remember, it's an expense. It has to be in brackets. And then packing material, packing material, right? So we're told here that 80% that were used during the financial year, right? Packing material of packing, were just the only 80%. So we're given the figure on this side of the packing material on information A, right? Packing material, they were given 12,000, or consumable stores in brackets 12,000. So we are saying 12,000, right? Divide by 20, because we only paid or we will pay only 80%. What we have divide by what we don't have. So we divide by 20 times by 80. Therefore, you get the figure there. So we are saying now 12,000, divide by 20 times by 80. You get 48,000. 48,000, it's our figure here, 48,000. In brackets, these are expenses. Okay, and so far we are fine. And then we go to the adjustment again on D. Let's go to D once more. A debtor Ubizulu who owes 1.2 has been declared insolvent. His estate paid 480, right? This amount was received and not recorded right off the balance. So which means here there's bad debts here, right? There's a bad debt here, right? So Mr. Zulu or Upe Zulu, who was owing us 1,200, right? And then he only paid 480. So 1,200 less 480. So which means it's paired with 720, right? 720. Sometimes this transaction they can say, okay, yes, they can say Ubizulu was owing us 1.2. His estate paid only 40 cents in a rand. 40 cents. So which means he paid. So which means with 60 cents is paired with 60 cents. You can say 120 times 40 cents times by 40 divided by 100. So it's the same. Then we can minus now from 1.2 less 480, then you get to 720. One and the same thing. Okay, so that is bad debts. This is bad debts. Firstly, you become a debtor. That is an asset, and then if you don't pay, you are a bad debt. You become an expense, right? So we have a figure there of 1,200 that initially was owing us, but he only paid 480. And therefore, we are left with 720 in brackets. Okay, quickly, we have a rent. We have a rent there, rent income. Right, rent income of 17,600 was received for 14 months. The rent was increased on the 1st of September by 10%. Okay, I would like to do this one with you, Mfundi, because le figure. Remember, we are doing income statement. On the income statement, we are dealing with only two items, income and the expenses, right? So we have rent income. Rent income. Right, so no rent income here. Let's do some workings separately. Let's do some workings. Okay. So calculation of the rent income when there's an increase. Okay, calculation of the rent income. Okay, calculation of the rent income So what is happening here? Okay, what is happening here? Let me just do the time cycle here. Right, so this, like a watch, like 6, 12, 9, and 3. And then in between, you are saying 1, 2, 2, 2, 2. Of January, February, March, April, May, June, July, August, September, October, November, December. When is our year end here? It's 28th. 28th of Feb, either 2020 or 2019. If you are saying 2020 is fine if you are using the Capricorn question paper, or 2019 if you are using KZN. Right? So the date of commencement, so which means Tina Sepalela on the 1st of March. Always date of commencement, it's the first day of the following month of the previous year. It can be 2019, sorry, it can be 2019 or 2018, depending which question paper you are using. So Sepalela until the year end. We're told here that the rent income of 17,600 was received for 14 months. So which means it passed 12 months with 2 months up until to April, right? The rent went up when it increased from the 1st of September. So before a rent increase, then it was how many months? 1, 2, 3, 4, 5, 6. So that is for 6 months, a rent was 100%. So it's 100 here, right? Plus, how many months a rent, increase? You're going to count September because it's the 1st of September. 1, 2, 3, 4, 5, 6, 7, 8. So it's 8 months. The rent went up by 10%. So which means it's 100 plus 10 is equal to 110. So that's why we've got 110 now. Equal to a rent. How much money was for our rent? It's 177,600. And then here we have 600 plus, we are saying 8 times 110, so which means 880, right? Now we have to add these two, right? Plus 600. Okay, add now these two, you get 1480. Okay, 1480, right? So now we are saying unknown divided by known times by a rent come over 1. So an unknown will be always that plus percentage. If let's say maybe the rent has, let's say everything was like this, but the rent has decreased, we're going to change the sign here, and therefore here we'll be having 90 because it decreased by 10%. So the unknown would be always that plus. So the unknown is this one, always. So 110 divided by the known. This one is known because we calculated that one, right? So we get 1480 times by the rent 177,600 over 1. Okay, so we're done now. We're saying we're calculating now quickly. Divide by 1480 times by 177,600. Is it 600? Yes, 600 here. Okay, so you get 13,200. Remember here, this one is for 1 month, so which means here times by 2 months. So you get now 26,400. Okay, so we have 26,400. Remember this amount, it's more. So which means here, because it was paid, it's an income received in advance, right? So what basically we must do now, we are putting the figure of the rent, 177,600 less 26,400. 26,400. Right, 26,400. The rent income, if you add these two, you get 151,200. Okay, 151,200, 177,600 minus 26,400. Right, there's a figure that you are getting there, Mfundi. Yes, Kubege. An interim dividends of 55,820 was paid on the 1st of September, but was debited incorrectly to the salaries. Remember, the interim for note number 8 in the ratios is not coming to the income statement, but because of these salaries, so which means now we are concerned about the salaries. Salaries, these are expenses. Salaries, right? It's how much the figure of the salaries were told there, but it was recorded on the interim while it's supposed to be here on the salaries, given the figure 55,820. Okay. Yes, so this figure would be positive because we are correcting. It recorded, I mean, it went to the wrong interim while it was supposed to be here. So we are correcting it now. So it has to be positive, this one. And then what else that is left here? Nothing. And then profit before interest expense. Okay, so we have now profit before interest expense, and then interest expense, right? And then profit before tax, profit before tax, and then taxation. So we're finishing now the income statement now because we are done with everything. And then profit after tax, profit after tax, right? Okay. We are given there on the second last adjustment, and just go down there. We are given there on the number 9, right? Let's look at the adjustment number 9 towards the end. Yes, we are given there on number 9. Income tax, right, is 30%. And I mean, income tax amount to 255,000 is equal to 30% of the net profit, right? Okay, so we're given that one. Let's calculate whatever that we have, but we can get what we don't have. So we're given the income tax. Income tax is the same as taxation because we are saying debit income tax. This is income tax, right? So debit income tax, credit SARS income tax. So we do have income tax 255,000 in brackets, right? So we're told that it was 30%. So it's obvious here it's 100%. So here it's 100%. And then here is 70%. Right? So now we are using this formula that says where you are going divide by where you are coming from. We are going from 100, we are coming from 30. 255,000 times by 100 divide by 30. Where you are going divide by where you are coming from. Therefore, you get 850,000. And then this minus this, or we can also use the same formula. You can say 850, right? 1,000. Where you are going from 70 times by 70 divided by 100. You get 5,950,000. Okay, even if we are doing it using emails. And then we have interest expense, right? Interest expense. Okay, we're writing whatever that we have here. Interest expense we are given there on Roman figure 1, 2, 3, 4, 5, 6, 7. Roman figure number 7 is written there. Now it's up with table 157,000, right? 157,500. right? In brackets, we always put in brackets to note number 2. This is note number 2, right? And then profit before the interest expense, you can calculate that one, right? You can. Okay. Now let's get here. This one, profit before interest expense. So you are reversing now in order to get that one. The figure there, it's if you reverse, working backwards, you get 100. We're going to calculate it now. 7,500. Okay. You can even start here on top, right? And then you can reach here that figure. Therefore, you are done with a net profit before the net profit. I mean, the income statement that was having a wrong net profit after tax. Okay, so we have 144. Let's do it. 144 and 200 less 600,000 less 48,000 less 720 plus 151 200. Okay, 151 200 plus 55 820. That's the figure there. Get this one. Get that one, profit before tax. Profit before interest expense, sorry. Profit before interest expense. We don't have interest income. We don't have. So something that we don't have here, we don't record because we're just correcting what was wrong. Quickly, it's a continuation of the question. What is another thing that they requested on the beginning here? Let's look at A, I mean, at the beginning there on 3.2. So I mean 3.3. Prepare the following notes of the balance sheet. Okay, quickly. There are two notes that they want there. 2 notes of the balance sheet. This is note number 5 and note number 8. Note number 5 is trade and other receivable. This is note number 5. Right? And then somewhere there, they want note number 8. Okay, note number 8. Okay, it's very important again mfundi ukwazi ukuthi i-format uyazi of these notes because some notes are changed. They've been like this since from grade 10. Right? Balekile uthi uyazi i-formula. Balekile uyazi i-formula mfundi. Right? Okay, we'll do it. Start with the first one quickly because of time. We have trade debtors. We have trade debtors. Right? We have provision for bad debts, right? And then we less this one, and then we get in net trade. Net trade. And then after in net trade, we attach, very important, we're going to attach what? Accrued income, as well as prepaid expense. We already have prepaid expense here. And then we can also attach SARS if it's debited. If SARS is owing us or we paid more than what is requested to SARS. Remember when we were doing a cash flow, we did talk about SARS, right? We also, so I'm just giving you a standard formula here, and therefore you'll be done with this note. So let's have a look quickly. Let's have a look at what is required or what we have in terms of these notes. Okay, let's look what is it that we have, right? We have the opening of the debtors control there. Information A, debtors control there were 44,800. I'll put the workings here so that we'll see 44,800. Yes, that's the figure of debtors control there. and they were told that, remember, awuvele nje ube i-data mfundi. First nje kade ngishilo, you become, ufike ube i-data, which means you go to the shop and say mina ngizokhokha, and then bese uthi awusakhokhi, you are a bad debt, which means you have become an asset, then you have become an expense, and then you can also a bad debts recovered or recoverable, you become an income, become an expense here. So here, if you read the transaction, we did find that there are people who were owing us. So this guy there, Ubezulu, he was owing us 1.2. So we're going to less 1,200 on Roman figure 3. Right, Roman figure 3, 1,200, right? And also, there's also another figure on 3, 4, 5, 6. I mean Roman figure 6, a debit with a credit balance. So going to add that 1,000 there, and then it gets us to our actual figure of debtors control, 44,800 less the bad debts plus the one that we recorded on the creditors while it was supposed to be on the debtors. So we get the figure there of 44,600. And then we have a provision for bad debts. Here we are given a provision for bad debts here at the beginning. There's a provision for bad debts there, right? That is 1,700. 1,700. And then we get the net trade. That's 1,700. Get the net trade. Net trade, it's 42,900. It's 42,900. It's 42,900. 44,600. Right? Less 1,700. 42,900. Yes, that's correct. And then we don't have an accrued income. We don't have an accrued income, but we do have a prepaid. Remember the prepaid? We do have a prepaid of that 25,000 from the directors. So of 25,000. Touch it here. So now we go and look how much is it SARS is owing us, or we are the one who are owing SARS. If you look there on the second last adjustment, income tax is 255,000, right? 255,000. While on formation A, SARS income tax was 26,700. The one that we paid in brackets provisional tax payment, we paid 26,700. So we can see what here we paid more than SARS. So which means SARS in this case is an asset to us. SARS is owing us now, right? So you're going to say 26,700 less 255,000. The difference will be 12,000. Okay, and then you are done. Plus 25,000. Therefore, we have to add everything now. Plus 12,000. So get 79,900. And then let's go to note number 8. Let's go to note number 8 now. Let's go to note number 8. Also, note number 8 is required. It's only 2 notes that are required according to the question, right? Another one, we call it retained income. It's not number 8. Retained income. Remember, this is part we are doing paper 1 here. The one that you're going to write on Thursday. Okay, you're going to see these things. So the format is also essentially important. Balance at the beginning of year. Okay, buyback of shares, buyback of shares. Okay, after buyback of shares, we have net profit after tax. We already calculated that one. Net profits after tax. Net profit after tax, and therefore dividends. Dividends, interim as well as final. Okay, and then you get a balance at the end. Balance at the end. At end of year. Okay. Qala ngalokho okunikeziwe kuqala okulula lokhu nje just the one that you are given. Okay. Net profit after tax calculated in the income statement. Nansi on the income statement. Okay. See bhale mashisa because he calculated net profit after tax, the correct one, right? So which means we have 59,500, mean 5,000, right? And we also given an interim on adjustment number 5. Yes, number 5, right? Roman figure 5 there. In interim dividends of 55,820 was paid, right? So we have the interim there. We have an interim 55,820. Okay. We are also told about on the last adjustment, the final dividends of 75 cents per share was declared on 28th of February 2019 or 2020, depending which question paper we are using, either the Capricorn one or the KZN. So which means here, something we're going to times it by 75 divided by 100. Number of shares issued at the end. It's here at the beginning there on A. Ordinary share capital in brackets 180 shares. You see, so the number of shares at the end was 180. So here it's 180,000 times by 75. Then you get the answer 180 to 3 times by 75 divided by 100. So you get 135,000. Okay, plus 55,820, get 190,820. Okay, that's what we have. And then we go there on the balance. We go there on that balance. Let's have a look at what do we have in the retained income. In the retained income, we've got something that is very strange. Retained income in brackets babhala for December 2018, 130,000. And then if you are checker lapha ku B, right? If you are checker on B, on the first, look at B there. On the 1st of December, right? The directors approved the repurchase of shares, right? At what? At 9 rand. This transaction was properly recorded. Okay. Let me just take you back a bit so that you can understand this. Let me take you back so that you can understand, because that is the key. That's where here you are tested, whether you understand this, right? We said note number 7, that is ordinary share capital, plus note number 8, that is the retained income, the one that you are doing, is equal to a cash flow, right? What is note number 7? Note number 7, it's average. Note number 8, it's more than the average, above average. Cash flow is what is issued. The issued, let me just use we have the issued, if it's written issued, or any payment, or repurchased, It can be through EFT or any method of payment, right? Therefore, you know that you are given this. It's like you are told A plus B equal to C. You'll be given either A or B or C or one or vice versa. So here we are told that on B, directors approved by repurchase of 20,000 shares at 9 rand. So which means here we are given a split of 9 rand because there's payment there, right? And therefore we need one of the two. So the information, you can calculate one of the two. How to calculate one of the two? Very simple. Everything emanates from note number 7. This is note number 7, right? Note number 7, it's a ordinary share capital, right? Ordinary share capital, authorized. Okay, we have authorized share, authorized shares. There's a figure there. And then the issued. The issued, our focus is always in the issued. At the beginning of the year, ordinary share issued at beginning of the year. Therefore, you record the figure here. That's a normal way. And therefore, ordinary share issued during the year. Record the figure here. And then there will be a buyback. Okay. Buyback of shares. In this case, we are told that is 20,000 buyback of shares or repurchase of shares. You must use the average here. You must use the average, right? You must use what? An average. Let me use black. Use the average. At average, right? At average, right? And then the figure that you have to get, it has to be in brackets. And we are given the number of shares at the end. It's 180. You can have a look here, Fundi. Here, right on A, it's 180 number of shares. A there. First one, ordinary share capital, in brackets 180. And then they even wrote the date, 28th of February 2020, right? 180,000, right? And then the figure here, it's 909,000. So this is an ordinary share issued at the end of year, right? So you can calculate the average here because that's information that we have, right? So if you calculate the average here, we're saying 909,000, right? Divided by 180,000. So you get 5 rand 5 cents. So which means here, for the average, you are having, we know already for then it's how much we paid for these shares. And therefore the split here is supposed to be 5 rand 5 cents. So for the retained, because we are doing the retained, we are saying 9 rand less 505. So you get 3 rand 95 cents. So what is left? It's 3 rand 95 cents. That's what we're going to use here, right? So 3 rand 95 cents. So we're going to say now, number of shares that we have, it's 120. So it's 20, not 120. It's 20. 20,000. 20,000. Right? Look at B there. 20,000 times by 3 rand 95 cents times by average 395. You can see there on the average. The average, the one that we calculated, is 395. Okay. So times by 20,000. So we'll get 79,000. 79,000 in brackets. We always write the figure of the buyback in brackets, either note number 7 or note number 80 or cash flow, right? And then we are told here that on the balance, on A, right? Ordinary share capital, I mean the retained income, right? We've got 130. So this figure must also include that 79. So we must add back that 79,000. So which means here, due to space, I'll just make a working like this one. Okay, space here, it's a limiting factor. I'll say 7, sorry, not 7. The opening balance of retained income, it's 130,000 plus 79, one of shares. So which means those are some of the workings, or you're supposed to write it here underneath, right? 130,000 plus 79 is 29,000. Let's just scratch it here. Okay, and therefore the combination of the two will give you the opening balance 130,000, right, plus 79,000. So you get okay, let's calculate once more. 130,000, right? How many zeros there? There are 4, not 130,000 plus 79,000 of the buyback. So you get 209,000. 209,000. So now we are done. We are adding everything now. This is our figure. This is our value there. You are adding everything now. 209,500 less 79,000. This one must be in brackets. Plus 5,905,000 less 190,820. So you get 53. Totally it's 53418. That's the figures that's going to the balance sheet. Okay, quickly, just because of time, we've got about 15 minutes left or so. Let's go to the balance sheet. What is important on the balance sheet? It's to understand the format, right? If you understand the format, therefore you are going to win on the balance sheet, right? Let me take you quickly to the format, right? We said e-accounting is all about 5 letters. We call it ALOE. It's A-L-O-E. Okay, we call it ALOE, right? ALOE. A, this one is for the assets. This one's for the liabilities. This one for owners, equity, expenses, and then income. Income, right? That is an income, right? When we were young and we're struggling with the spelling, we always call like that, right? And the first 3 letters go to the balance sheet, A-L-O. This is the balance sheet. Balance sheet. And therefore, the last 2 letters, this is income statement or nominal. Income statement or nominal account section. This is balance sheet section, right? And therefore, this is one. This is one. Okay, this is 1, 3, 2, 5, 4. For the income statement, as you see, we started with the income and then the expenses, right? For the balance sheet, you start with A for the assets and then follow. So which means we are saying A is equal to O plus L. We are proving this equation. There's an equation that we are proving. So which means O1 is equal to 2 plus 3. Right, there's an equation that we have to prove now. Okay, quickly, let's go and do the balance sheet by looking at here. By understanding this, therefore, you're going to win on the balance sheet, right? Let's put this one here next door. So we're going to start with an asset. 1, we said it's an asset, 1, right? So balance sheet, okay, we have balance sheet now. Balance balance sheet. Okay, balance sheet for the year ended. The year ended, and before you write 28th of February 2020 or 2019 if you are using September last year, because we said it's one and the same question paper. So we're going to start with one. One, it's what? These are assets. You start with the bigger ones, assets. So even here you write assets. Right? It's a heading. And therefore we start with the bigger assets, right? Non-current assets. It's also a heading in its own. And then you attach here what? You attach, so somewhere there will be notes, the space of notes. So this is note number 3. What is note number 3? It's fixed or tangible assets. Fixed or tangible assets. Let me write the notes here. Okay. And then we have another asset, we call it financial asset. Financial assets. Sometimes we have fixed deposit or investment. In this case, as you see, we have fixed deposit. Fixed deposit. Right. If you add these two, must give you a non-current assets. And then you are going to the current assets. Current assets. Current assets. Right. The current assets. Right. Current assets, note number 4, note number 5, note number 6. Right. What is note number 4, note number 5, note number 6? Note number 4 is inventory. Inventory is being made out of two things, right? Trading stock as well as consumable stores on hand or stationery on hand, right? Inventory. What else? Trade. We already dealt with note number 5. Trade and other receivable. That figure that we get from note number 5, the one that we're doing trade and other receivable, we must put it here, the total. Trade and other receivables. Right. Therefore, then we have cash and cash equivalent. Cash and cash equivalent. Cash and cash equivalent being made out of bank petty cash and the cash float. Okay. If you add these two, you get your, and then we are done with UA. You can see UA now is done with the bigger one and the smaller one. So here we are having what? Total assets. So we are having now what? Total assets. We have total assets, the total figure there. And then now we are talking about UO and L. So which means UA is score or is big. UA alone, it's equal to O and L collectively. So that O and L, so that they can be equal to UA, they must come together. So this one, it's got a bigger, muscle. This one, it's big UA, the assets, right? So now we are saying equity and liability from owner's equity. So we are saying equity and liability now. Equity and liabilities. Equity, it's a heading. Therefore, you start with what? Shareholders' equity. Shareholders' equity. Right? It's also a heading. Note number 7, note number 8. What is note number 7? We're doing it now. Ordinary share capital. I can hear people saying there on the ground, right? Ordinary share capital as well as retained, the one that we're doing, retained income. We already have the answer for this one, retained income. Collectively, if you add this, is equal to shareholders' equity. Then we are going now to what? Non-current liability. Non-current liability. Non-current liabilities, right? In this case, we have a loan. You can be a loan or mortgage bond. At university, you'll be having a debenture. So we have a loan here. Loan. This loan is coming from what? Coming from MGM Bank. Very important to write that. Okay. And then we have now current liabilities down here. We have current liabilities. Current liabilities, note number 9. Trade and other payables. Trade and other payables. Right. And then we might also have things like current portion of loan. Since our SARS was owing us, was a debit, which is not going to be part of this. Right. We can also have it's a current portion of loan, bank overdraft. Right. So in this case, we have current portion of loan and bank overdraft. So let me just use another color for that one. So we have current portion of loan and bank overdraft. Bank overdraft. If USARS were the one who were owing USARS, we're going to record it here. Or shareholders for dividends, we're going to put it here. So in this case, and therefore we are done with the format. We have now what? A total equity and liabilities. Total equity and liabilities. We are done with everything. So it's a matter of putting the figures. Let's put the figures quickly because we still have some few minutes, especially the one that we calculated. Okay, retained income, we already calculated retained income. That's the figure there of the retained income. Okay, let's put it quickly. 5,3. There were 5,3,4,1,8. Okay, and then we also calculated what is it that we calculated? Trade and other receivables. There's a figure there. Trade and other receivables. Put it there on top, right? 7,9,9,0,0, right? And what we have to do, it's obvious on this information, equity and liabilities is the one. Therefore, you have to put information and then reverse. You must work it backwards. So that you can prove this one, as I was showing you there, that A is equal to O plus OL. Mfundi, cabanga ukuthi ke usizakele, sinayo futhi nane cash and cash equivalent there. That is equivalent to 1,500. There's a figure there. And we also have current portion of loan, right? You have to go to that transaction of the loan. You say loan at the beginning of 1.2, of 1.5 less loan at the end. I think it's 144. Let me just check the 1,144. You get the current portion of loan of 360. So which means current portion of loan there, it's 360,000. So which means here it's a loan minus that 360,000. Okay, the loan amount of 140,000. Then you'll be having the actual amount of the loan there, that is 780. And then you must able to work backwards. Mfundi, ngicabanga ukuthi usizakele ke, especially for paper 1 khulu ngoba ziningi izinto esizenzile namhlanje. Ixesha ke kwaXhosa luchaba. Time is always a limiting factor. Ngibonga.
Siyathemba nifunde kahle nasithokozela isifundo sethu sanamhlanje. Enisethulelwe ngezilokotho ezinhle iThala libambisene neGo Digital SA Foundation. Thamelani ke futhi esilandelayo ngesikhathi sifanayo Ningakhohlwa ukumema nabanye abafundi bebanga le-12 ukuze nabo basizakale kulolu hlelo. Uma ninemibuzo noma nifisa ukuxhumana nathi, ningasithinta ngokufaka imibuzo yenu kwinombolo yethu ye-WhatsApp ethi 068 151 1072. Mfundi, ungakhohlwa ukubhala isifundo obuza ngaso ngaphambi kokubhala umbuzo wakho. Angiyiphinde inamba yethu 068 151 1072. Siyabonga.